Hi, this is Joe Rabil with Invest Like a Pro. I'm going to give a quick update on the S&P since it's only traded one day since the last time I did the video. But I am going to show some things that apply to what's taking place in the S&P, as well as some individual stocks that I think can be really helpful related to breakouts from wedge patterns or triangles. Kind of the type of thing that what I look for as to whether to buy the actual breakout or to wait for a little bit more confirmation. So let's get into the charts here. Let's go straight into the S&P chart. The monthly and the weekly really have not changed much. The only thing that's taking place is we're getting close to the end of the month, and this monthly bar is trying to close above the 18-month moving average again. I would think that I would consider that as qualifying as somewhat significant if we can do that. Because the moving average is flat. I'm not, giving a whole bunch of weight to it, but at the same time, it would be worth noting. If we go to the weekly chart, we did close above the weekly 18 MA, and the MACD did close above a signal line. I mean, these are small positives. I want to see some price bar expansion, especially on a daily chart. Let's just zero in on the daily. As you can see, what's been taking place is ever since we got up to the 50% retracement, we've really just been working sideways. I mean, yeah, we made higher high here, and then we made a lower low here, but there's really been no follow through, no real, if you look at the move here versus the pullback, and then another move to the upside, and then you made a slightly lower low, and now you're trying to make a slightly higher low. But again, we're looking for price action here that would be a little bit more significant and confirming. And notice how the ADX is really low. We're going to need either green or red to make a pop here to really kind of make a convincing start to a new move. A lot of times the green and red DI coincide with volume action. So if we get an increase in volume strong price action is usually accompanied by volume, then a lot of times we'll see a nice spike in one of the either green or red, depending on which direction this really wants to go. Also, just want to mention, I'd love to get a little bit more feedback from you guys on the video content in terms of direction. This channel is still young, so it'd be very helpful for me to kind of know what types of videos are of interest to you guys. All right. Let's take a quick look at the hourly. Again, we had the breakout, I'll just point out, above this level here. It hasn't had much follow through. It's consolidating. I think if it consolidated a little bit more, we've got a zero line setup developing where the MACD is holding or coming back down to the zero line, and ADX is getting low. Actually, it's pretty low, but sometimes when I see the zero line, I almost want to see the ADX down to like 10 or something like that. But anyway, as this consolidates, if we get some kind of a strong move back up through this breakout level, I would consider that to be, a pretty bullish sign. We're still above what I would consider to be kind of the stop out point for this breakout, which is this bar right here. Let's just take, I want to take a second and show you what I think is real important criteria. I've sort of been beating around the bush on this. I've given you some insight through videos. If you go back through old videos, I mentioned the ADX, I mentioned the DI lines, but I've been waiting for something important to develop on the S&P. And just to go back and look at the S&P real quick, I mean, if you look at what's taken place, we've had a rally off the low, and it's probably easiest to see off the weekly chart. And we've rallied and we've rallied and we've rallied, but we haven't had a true signal. What I would consider to be a true signal. We've had some close calls, and the hourly kind of triggered for an hour there, but there was really no price expansion to the downside and no confirming evidence on an ADX basis or DI basis. And then the same thing to the upside. We had the breakout above this sort of little level, but it hasn't had any real follow through. So as we look at that, I think, the goal sometimes is to avoid making senseless trades and just losing money. If the market gives you a sign that the market is getting ready to go back down again and there's sellers really want to take over, then I think you want to take advantage of that and really get aboard and see if we can't make some money going to the downside. But just to force it every time the market shows any kind of a little move to the downside, and just, it's the difference between trading what you see versus trading what you believe. I mean, you might believe the market's going down because you look at the unemployment and you look at the economy and the market's got to go down, right? I mean, but the reality is you have to wait for what you see, meaning the indicators and the price action has to confirm what you believe or you can't take the trade. So that's how I would view this. Let's go back. I want to show you some patterns. And I think the reason why I think this is relevant is again, trying to buy breakouts out of consolidation patterns. I mentioned in the last video, I'm looking for, especially in short-term patterns, but also in bigger picture patterns. I want to see, consolidation develop. So this would be a wedge pattern or a triangle pattern at the top up here on the left. And I've shown two different versions of the same chart. So if you look at the left one on top, it's a triangle or a wedge. And then on the right, it's the same pattern. The only difference is what took place at the end. Let's start with the left one. And I want you to look down and understand what I'm showing you with these DI lines. So and this happens in either case, whether it's a wedge pattern, whether it's the rectangular pattern at the bottom or an ascending wedge, which is kind of a combination of the two, where the ascending wedge would be the bottoms are rising and the tops are flat. That would be an ascending triangle. So any one of those three patterns are going to be played the same way based on what's taking place with the DI lines. In the first example on the left, DI does not cross over 25. But on a pullback, it finally holds above red. So if you notice what took place, green crossed above and then it crossed back below. Green crossed above and then it crossed back below. Green crosses above and this time it holds. And so once I see that, and preferably what's going to happen in price, you're going to have some form of a little bit of a higher low. It's going to be a little tighter to the breakout area. Instead of these big swings that we're seeing here, we get a situation where you get a little bit of a consolidation, but maybe you only retrace half of the range, or maybe even a third of the range. A smaller, higher low forms, and that's really what's going to develop this this cross and hold pattern. So I'm using some lingo from a book from Charles Schaap. He wrote a book called 80 Excellence. I read that in 2005. I'm telling you this because it's a great book. Just understand there's a lot of detail in there, and it's somewhat complicated, I think, and it's expensive. So just take all that into account. I'm not saying not to buy it, but I would suggest to you that I read it in 2005 and probably really started implementing it with a degree of true success probably in 2010. It took a long time to continue with it and work with it. It's not that I didn't get something out of it right away, but to really implement it and understand it, it's going to take a little bit more time. So anyway, I'm giving you some of the cream of that book. I'm going through and giving you some details of things that I've used and applied and I've found to be very, very useful. So again, on the left, we're looking for this pattern where green doesn't cross over 25 and price doesn't break out, but it gives you the sign that green is improving because on the pullback, it doesn't break back down through. And when it does that, I'm willing to buy a breakout. So that's sort of scenario one for all of these type of patterns. And I'm always looking for a pattern to develop in price. You don't just want to look at the DI lines and wait for this pattern to develop. If there's no pattern in place on price, don't worry about the DI lines. Look for patterns first. Price is always the most important thing you're going to use. You want to use the DI lines and ADX and MACD as supporting evidence. On the right, the difference here is as we consolidate, this time you broke above the downtrend line. In both cases, this is a horizontal line, but in both cases you broke out and the green DI broke out too. But notice green just went straight above red and straight above. There was no higher low in green before it broke above 25. So in this instance, we want to wait for a pullback and a higher low, sort of a test of the breakout area and then a turn up of green along with price. And in this case, you're getting, I think, a nice entry in a pattern where you could probably, if you wait for the proper type of reversal pattern or a higher low develop, you can put a stop in right underneath this horizontal breakout area. And I view that as being, a great risk-reward scenario. So I wanted to give you a little bit more insight into how I look at the DI lines, because I know I've mentioned them a few times, but I haven't given you as much detail. I hope this helps in understanding when I would buy a breakout versus not. I mean, you just have to understand, if you look at this low here and look at the move you had to make, if you make a big move like this, you're going to be overbought by the time you break out. So you're going to want to wait for a higher low to develop in that case. And that's a pretty good rule of thumb, in my opinion, as to how I would look at breakouts. You never want to buy breakouts when they're overbought. So all these rules apply to the downside. I just thought it would make it easier and just use one side of the trade. But anyway, if you have any questions or comments on this or any other thoughts on new video ideas,